Hang Seng has recovered to trade quite flat right now. Taiwan still under pressure though.
17,554 level. If this does not break, I mean, one could say that the uptrend remains intact.
Stable numbers in what was a really challenging environment, above street estimates.
The results were a beat on all parameters. The revenue at 3,600 crores, above our street expectations.
Take the Nifty down about 15 odd points, the Bank Nifty down about 90 points.
We should see some of the discretionary and FMCG names also kind of show improvement in margins.
We've benefited from the gentle devaluation of the Indian rupee.
AU Small Finance Bank, for them, the net interest margin compressed in Q4 FY23.
6 points down on the Nifty, 2 down on the Sensex.
Gujarat government has gone ahead and announced a new policy for minimum levels of dividend distribution.
CX is reacting today, and that is because their Chief Technology Officer, Mr. Shashank Sathe, has resigned.
Making around 1,800 crores in terms of revenue and EBITDA of around 300 crores over the next 2 years from this particular acquisition.
Overall, the texture of the market remains on that consolidation level at that 17,788 mark.
Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Reema and Surupi here in the studios. Nigel, of course, joins us from the newsroom floor. Guys, hi. Good afternoon. It's a quiet day, absolutely quiet day. It's a small range day as well so far, unless, of course, things change in the next 60 minutes of trade. So that's what we are looking at. Nifty is still treading water around yesterday's high. I mean, actually, it's come off a little bit in the last 15 minutes or so of trade. But broadly, we are around yesterday's highs. 17,863 is the level we've kind of hopped on, and that's the level to really take out if the market wants to open upsides for itself. That is the recent swing high. The Bank Nifty is also absolutely flat, and that index needs to take out 42,965 as a level. And like yesterday, I think it's all about large moves on individual stocks. Some actually are a repeat of what we saw yesterday. So take a look at IPCA, take a look at Crompton, continuing to sell off. On the upside, you've got a whole new set, which is all these Gujarat-based public sector companies which are flying away. We put the spotlight on all of those in a bit from now. Reema, hi.
Hi, but on the whole, the earnings picture, right, since that's the big driver, hasn't been so bad. Of course, we got that shock off from Infosys. A couple of the other large cap IT numbers were dismal. But outside of that, over the weekend, ICICI Bank, Reliance Industries were pretty solid. IndusInd Bank was a decent set of numbers. Overnight, take stock of the numbers that we've had, and you would see that there are more earnings hits than misses. So KPIT Tech numbers just came out, look good. Mahindra CIE has surged post its numbers. Tata Consumers opened flat after that 5% up move that it had yesterday, but since then it's built on the gains. And Tata Consumers, after a strong set of numbers, is up close to about 1.5%. Bajaj Auto was at a fresh 52-week high yesterday, so from that level it sold off. But the numbers per se, the margin improvement has been liked by the street. And Poonawalla FinCorp, also numbers just came out and they also look pretty healthy. AU Small Finance Bank, the numbers were pretty okay. Yes, there was a bit of a NIM contraction, but the numbers were pretty all right. So that you would call it as a stable or a neutral set of numbers. In terms of misses, you only have Rallis and Dalmia Bharat. So what I'm trying to say is that in the earnings picture so far that we've had more hits rather than misses. That said, the kind of drubbing IPCA Laboratories and Crompton is seeing for the second day in a row, they're down 15%. And again, the fall is coming in on very, very large volumes. So there's no stopping.
Absolutely. I mean, whatever justification the management perhaps gave to analysts yesterday on that call for their purchase of what is essentially a loss-making company, 9 months. I mean, Unichem is a loss-making company. And they've sold off, of course, their domestic business. Probably not going down well with the street. It's very, very evident the manner in which IPCA has been reacting. But just to come back to the large cap screen, if you can pull up the contribution chart, why are things completely netting each other off? Because you've got some of the consumer names on the upside, earnings reactions largely, as Reema pointed out. So your Nestle and a stock like Tata Consumer there on the upside. But then you have some of the heavies. Look at Reliance, look at Kotak, look at ICICI Bank. They're enough to rein in any sort of optimism. Of course, we still have two sort of major numbers that we're looking out for. Bajaj Finance and Finserv, of course, they will be the ones that will be hitting the headlines. And then, of course, a slew of the life insurer earnings as well. So it's all very stock specific. mood-driven, performance-driven. But otherwise, for the market as a whole, Nigel, it's been a very range-bound day, not really able to take out that congestion zone, 17,750 to 800, 800 to 825 thereabouts. Not convincingly able to cross that, at least right now.
Surbhi, at the start of the day, normally if you see red on the screen, you'll say, oopsie daisy, are we in for a bad day? I'll tell you what, if you're seeing red on the screen and the global markets are a little bit of a tizzy, it's actually good news. And the last couple of days, if you bought the day's low, well, you're making some money out there. So the buy on dips in the Indian markets, well, that continues. Now, it's testing your patience whether or not we can break out from here. But clearly, intraday, if you look at the Nifty Bank lows, well, that's up 300 points from the day's low. The Nifty as well is up 80-90 points from the day's low. So you get closer to around the day's low, you're playing for a bit of a bounce. Remember, on the downside, the 17,650, that's your stop loss. So in case you're going to lose out, well, you lose out on 50-60 points or thereabouts if you're buying, because that stop loss is in place. The Nifty Bank is the one that's showing some good traction. That's been the leader, and that continues to look quite good. Remember, tomorrow we'll have expiry that plays out, and on the penultimate day, you're expecting a bit of a move, but that's not really happened today. However, on the put side, there is good amount of writing. 17,750, 17,800 put. Between them, a whole lot of open interest is there. So that's again telling you 17,650, 17,700, at least positioning is such that that level should hold out. On the upside, anyone's guess whether or not we can revisit that 17,850, which incidentally is the recent high, closer to around the 100 EMA.
Okay, Nigel, thanks for that. So, the levels are set. The game is on. Let's see if we are able to take some of these out. How should you position yourself in the last hour of trade? That's the question we start the show with always. Mitesh is with us to answer that. Mitesh, hi. I mean, it's absolutely flat in the index. A quick view there, and then, of course, move on to what stocks you'd like viewers to trade.
So, good afternoon, Prashant. I think the broad view remains same. We are very, positively biased. We are in an up move. But within the up move, I think after 3 weeks of rally, it's a consolidation. Broadly, 17,820, 17,550 is the bigger range. And I think we should possibly in a day or two try and attempt to break from the upside. If not, then I think, a decline to about 17,700, 650 zones would be a buying opportunity. So maintain a long bias. On the stock side, I think Tata Consumer is something which had a big breakout, and then yesterday was a day of consolidation. It's again restarting its uptrend. So buy here with the stop below 733. Look for targets of 775. And Siemens as well has been in a strong up move. So that's a buy as well. Keep a stop below levels of 3390 here. Look for targets of 3550.
Thank you very much for that. Let's talk about the segment of the day, and those are the Gujarat PSU stocks surging in trade after the state of Gujarat has announced a new policy for minimum dividend distribution and for issuer bonus shares. Sonal is here with the details and the stocks which benefit from these developments. Sonal.
Thank you so much for that. A big move is what we've seen across these stocks today in trade. That is because the government of Gujarat, they've changed their dividend allocation policy or ways to reward the shareholders of these companies as well. In their policy note, they say that in terms of dividend, the company should be paying 30% of PAT or 5% of net worth, whichever is higher, to the shareholders. And in terms of the buyback, a PSU which has at least net worth of 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and issue and announce a buyback as well. For bonus shares, the surplus and reserves, if it's equal to or more than 10 times of the paid up share capital, and they can do a share split if the market price or book value exceeds 50 times of its value currently that they are stating as well. There's 7 of them. All of them are up and buzzing in trade on the back of an expectation that maybe, yes, now the shareholders will be rewarded at a higher level. And now I just took a look at all the financials of the companies as well as to whether they do qualify for this or not. And there was an interesting take that GNFC is the one which can actually do all the things that the Gujarat government stated in its policy document. They have a cash of around 1181 crore rupees. They have profits of 1704 crore rupees, and they have a net worth of around 7991 crore rupees. So they will be able to meet all the criteria that is set by the government without taking any stress on their balance sheet as well. For Gujarat Gas, while they do have a good net worth, enough profitability as well, the cash balance in the book is a problem because these numbers, of course, are as of FY22. Things will change in FY23 and the next year as well. But in FY22, Gujarat Gas had lower cash. For GSFC, they have cash of around 315 crore rupees. So they will be able to pay out around 5% of the net worth, which is 600 crore rupees, or 30% of PAT, which is 300 crore rupees again. But again, important note, GSFC is also rallying because it holds stake in a lot of these listed companies from the Gujarat government. Gujarat Alkalis and Chemicals has a cash balance of 300 crore rupees. That is also surging in trade. GMDC too has a higher cash balance as on FY22, 1200 crore rupees here. So the company, as per the rule, can also go ahead and do a buyback. So that is working well for GMDC. GSPL is the other one which has a lower cash in FY22 at 562 crore rupees. But with the higher tariffs that will kick in from FY24, they expect cash levels to go higher. So of course, the change in the balance sheet in FY23 and FY24 will impact their ability to give out dividend and issue buybacks as well. Just for reference, their dividend payout for all these companies has been to the tune of 9% for GNFC to as high as 34% for GMDC as well. So overall, yes, it's important to note that these numbers will change in FY23 and FY24. Basis current numbers, GNFC is in a better position to actually align with all these policies that the Gujarat government has put out. And also, a lot of them have capex coming ahead as well. So how will they allocate their cash balances is something that we'll be watching out for.
Oh, yes, absolutely. Thanks very much for all that perspective and the numbers. That data is quite helpful, Sonal. Let's ask Prakash Diwan what he makes of this move. Prakash, so, Sonal and I were discussing this on our digital show just a while back as well, that, yes, Gujarat, Narmada Valley and GSPL, these are two companies that right now meet all the criteria, even going by FY22 numbers. But in some cases, it's a little warped because you might be meeting the criteria on the net worth parameter, but you don't have adequate cash to really make a big dividend payout. But yet you have to. So what do you make of the policy announcements? And any interesting stocks worth looking at, just purely from a dividend or buyback play angle?
So, Sylvia, I think what we need to understand is the spirit of the letter is more of this communication is more to clear any kind of confusion in decision making and make it much more uniform and objective. It's not necessarily to compel these companies to pay out dividend, but the idea is that they should not sit on capital without allocating it to the expansion needs that they would have. And it would kind of come back to the owners, to the government of Gujarat primarily, timely enough, right? So that's the whole idea. I mean, it's just to kind of set some objectivity in the governance angle to the whole cash allocation point. Now, if you look at all the companies and what Sonal ran us through on the numbers, to my understanding,
Prakash,
the best bet at this point in time is GSFC.
Prakash, I'm so sorry I'm interrupting. We'll have to come back to this story because an equally interesting one is playing out right now. Maruti's numbers have come in, and that EBITDA number is below estimates. The PAT number was below estimates. If I saw the revenue line flashing, that also seemed below estimates. Let's see if we can go across to Sonia. Yeah, the margins below estimates. Sonia? So below estimates, first glance?
Absolutely. So, I just have the top three numbers. As you said, revenues at 32,048 crores, slightly below what the street was estimating. The profits as well, lower than expected at 2,623 crores. But I think it is the EBITDA number, 3,350 crores is the EBITDA number that I've seen. And, that compares to 3,523 crores that the street was estimating. It's still a growth. I mean, on the back of a low base, same time last year, the EBITDA figure was 2,400 crores. So in that context, it's a 20% growth, but the expectation was a 25% growth for Maruti's EBITDA. That's also because, there was a healthy festive demand, price hikes have been undertaken, so realizations were expected to improve. So this would come as a bit of a disappointment to the street. I'm not sure of what the margin figure is. If you could help me with that one, then we'll be able to, sort of analyze what the disappointment. Okay, 10.4%. I heard Nigel scream that. Thanks, Nigel. 10.4% is not too bad, really. 9.8 was the expectation. So if it has come in at 10.4%, then it is the poll was okay. 10.7% was our poll, which means it's slightly lower than what the poll had thrown up at about 10.4%, but not bad. So, if you had to summarize these numbers, they are slightly below what the street was estimating, but there's no major negative surprise. I'm just going to try and look through some details, but if Prakash Diwan is still with us, Prakash, the stock has not done much this year, and I think the key trigger on which Maruti will rise is the the SUV market share. They're looking to get it to 25% from 18% currently. The success of the Jimny and the Fronx is what we're awaiting keenly. So in that context, these numbers, how do they look? Even though they're slightly lower than estimated, would you be disappointed? And what's your view on the stock now?
So I don't see any disappointment in these numbers, Sonia. I mean, this was a quarter that was, I think, utilized by the company in investing into the rest of the year. The promise of future launches on the SUV portfolio. They've been probably gearing up for all of that, and probably in the first half of May, you'll see some of these products being introduced to the market, and I'm sure they'll be very successful. So the first 3 months have probably been put to use in terms of preparing for the rest of the year. And remember, the chip shortage issue was not completely out of the way in that quarter. It's only towards March end, April beginning that we started seeing some sort of semblance of comeback, and as some of the other players like Tata Motors and all indicated very clearly, this set of numbers is not at all disappointing. In fact, Maruti, on the scale that it works, has been able to maintain its market share and realization as well through the last many quarters. And I'm sure this quarter at 10.4% margin gives you that same indication. So I don't see any disappointment. The stock hasn't kind of built any high expectation either, Sonia. So it's not that, these numbers are going to make it negatively impacted.
Got that. Just wanted to once again point out that the margins compared to what we saw last year have gone up 130 basis points year on year at about 10.4%, slightly lower than what the poll was throwing up, but no major negative, as Prakash was also pointing out. Ashwin Patil also joins in. Ashwin, these seem like a decent set of numbers, although slightly below the street estimates. Your thoughts on it, and what do you see as the big trigger for the stock now? Because the stock hasn't done anything this year so far.
See, I think the numbers have come quite in line with our expectations. We were going on with about 10.4 to 10.5% kind of margins. And definitely that's a good improvement on a YOY basis as well. So I won't call it disappointment at all. In fact, it was a silent quarter for Maruti. Because the impact of RM costs and all was with the inflation in steel going on, I don't think that RM costs must have helped them a lot. But the increasing dependence on the SUV, I mean, I won't say dependence, increasing market share in the SUV segment and all, the product mix must have improved this quarter definitely, and that's why these margins have come. So it was a silent quarter, I would say, but the numbers have come quite in line with our expectations. And definitely going forward, we would see the couple of launches that are happening, Fronx and Jimny. So from May onwards, we can see an additional stream of volumes as well as revenues coming from Maruti. And definitely FY24 should be a good year for them with these launches, as well as, the realizations are improving. And also, the El Nino impact, I don't think that will be, it's actually the Met departments are saying that it will be quite neutral. So the rural leg of Maruti also will be seeing a good demand. So I think that on and on, it will be a good year for Maruti.
But the question really is, although it could be a good year, right? Is there too much valuation headroom? And Abhishek from Sher Khan is also joining in. So Abhishek, I wanted to get your thoughts in on this as well. Maruti, if you look at it, is trading at around 24 times FY24 earnings, while about 20 times FY25 earnings. Given that this quarter's numbers are not great, largely in line with estimates, a little bit of a disappointment compared to estimates. Do you see a lot of valuation headroom now for Maruti?
See, if you see that for a larger part of a time, we haven't seen a significant re-rating in the stock. So whatever the valuations we are saying, that it's reflecting the current picture. But going forward, if you put few minutes on these numbers, that this was the consecutive fourth quarter when company has reported a sequential improvement in the EBITDA margin. One. Second, that as the other person, other analyst has rightly said that this quarter was a silent quarter and largely impacted by the dealer inventory management because of the implementation of BS6 phase 2 norm. But going forward, if you see that especially on the market share side, which would drive its valuation, is that we see its market share in a different way. As you know that Maruti is not present in the diesel segment. And if you assume that the diesel segment is constituting roughly 20% to the total PV segment, then the Maruti's addressable market is roughly 80% of the total market. And it has an overall market share of 40%. So it has a 50% kind of a market share in the petrol plus CNG segment. Now, going forward, if the diesel segment would shift towards the CNG or petrol segment, which we are seeing in the urban area, then definitely its market share would improve, and market share improvement would directly reflect in the improvement in the valuation. And on the volume side, as we have seen a pre-COVID area when the dealers were sitting on the inventory, dealer inventory, and now the dealers are observing a waiting period, and demand is higher than there is a supply. Then in context of this kind of a scenario, I think the valuation upgradation is still there.
All right. All right, Abhishek and Ashwin, thanks a lot for joining in and giving us your view on Maruti's numbers. So just to summarize, by the way, Maruti has also announced a capacity addition of up to 1 million. They will be funding that capacity through internal accruals, and that capacity addition is largely to meet higher demand. So that, of course, is a positive sign. So just to wrap up, it's been a healthy growth this time around, slightly below street expectations, but I don't think it should be too much of an issue. 19% revenue growth. The margins have gone up 130 basis points year on year at 10.4%. As the analyst was pointing out, it's the fourth consecutive quarter for margin improvement. And the big trigger really is what Maruti manages to do in the SUV segment, whether they can get their market share to that 25% guided mark. So that's the next big thing that the street is watching. But all in all, slightly below street estimates, but nothing major to worry. It's back to you guys in the studio.
Sonia, just want to point out, I think this capacity expansion announcement is the big kicker for Maruti. Yes, I mean, we can quibble over the slight miss on margin here and there in the fourth quarter, but look at the signal because they're adding 1 million units. That's 10 lakh units. And their total existing capacity at Manesar is 13 lakh units, Manesar and Gurgaon put together. And they're saying that is fully utilized, and therefore they're putting up this additional 10 lakh units. 1 million units is what they're talking about. And perhaps that's something that the market can take heart from. Stocks actually turned into the green right now. Not too much, Nigel, but slight uptick coming in on Maruti. But yeah, we kind of got hijacked by these numbers. We were discussing these Gujarat companies, and we moved to an NCR company. Nigel?
Well, that's right. I'm just wondering whether or not some of those ancillaries will gain as well. If the big boy is going to go ahead and increase capacity, whether the likes of Jai Bharat, Maruti, PPAP, Jacket, Lumax Industries, all of them, they are Maruti ancillaries as well. So let's see whether or not some of those stocks do well. Keep an eye out on that front as well. Time to slip in a short break. You come back, we'll be joined by Mr. Rupen Rajguru of Julius Baer. He'll be talking the sectors that he likes as well as his view on the markets.
Welcome back. Let's talk about Ipca Laboratories. Now that continues to lose ground in trade, continuous pressure seen on the stock after the Unichem deal. This is despite the management trying to allay fears in the conference call yesterday. They went on to say that they anticipate a revenue of 1,800 crores from the acquisition over the next 2 years, but there is no respite in terms of the stock fall. Ikta's here with more on what analysts made post the conference call and what they're worried about. Ikta.
Thanks for that. Well, yes, Ipca Labs was down 10% in yesterday's trading session, reacting to the Unichem acquisition, and you're seeing follow-on selling today. The stock is at a 3-year low. Now, they did hold a call with investors at 4 p.m. last evening. A couple of key takeaways is that they are estimating 1,800 crores in terms of revenue margins, EBITDA of around 300 odd crores from the next 2 years from this particular acquisition. They plan to work on new launches, increasing market share in existing products, synergies expenses as well as rationalizing R&D. Now, there is a shift from the GST rebate process to GST refund, and that can unlock an amount worth around 250 crores in Unichem. They also have a land parcel which is available in Mumbai, which could probably be monetized in the future. The transaction is expected to be completed in 4 to 6 months. The company does not have any plans to increase its stake in Unichem post the open offer. Unichem has around 76 ANDAs filed with 54 approvals. Top 10 products are 70 to 75% of the current business. Ipca Labs still has the status quo when it comes to its 3 plants which have regulatory issues. They have not seen any sort of update come through. Now, however, in terms of all of these updates, there were a lot of queries from investors asking the rationale of paying the amount that they have for this particular company, simply because of maybe the poor fundamentals in terms of the margins as well as the revenue growth, which has been quite slow, and it is a vanilla US generics business as well. So that was probably something which continues to disappoint the street. Now, IIFL has written on this particular transaction. They've said that the acquisition has raised capital allocation concerns. The deal would increase Ipca's exposure to the inherently low margin, low return US export business. Deal is also expensively valued. They've revised their target price lower but maintained their ad call.
Oh, okay, all right. Thanks a lot for that, Ekta. Well, just to highlight a couple of stocks, Lumax Industries has moved to the high point of the day. That's one of those companies that gets a good amount of their money from Maruti, so keep an eye out on that one. It's moved to the high point of the day as we speak. Asahi India Glass as well, that's another one as well that supplies some material to the PV makers as well as Maruti, so that one as well should come off for you on the street. Let's move on then. Crompton. That's been under pressure post the reject that we've seen at the top. They had a con call yesterday. Surbhi joins us to fill us in with more details on that. Surbhi?
Crompton is in focus yet again. Yesterday, Crompton announced that Promeet Ghosh will be taking over as MD and CEO. The street wasn't too excited about that as he lacks operational experience. Now, the company did hold an analyst call and addressed some of these concerns. They said that the KPI for new MD and CEO, Mr. Ghosh, will be the same as what it was for ex-chairman, Mr. Ghosla. Mr. Ghosla will continue to advise and guide the new MD and CEO, along with focusing on integrating Butterfly with Crompton. The new management will also be focusing on top-line growth and absolute bottom-line growth versus the earlier focus of maintaining margins. In the con call, the management did say that company-wide there are attrition concerns and they will be focusing on addressing these attrition concerns through digitization and automation. On the business front, the company highlighted that it has a good pipeline of products for the future, and post-corrective actions taken in the pump segment, the management expects a strong performance in this segment in the coming quarter. The management also highlighted that there were quality issues in the BLDC fans and that they have been addressed, so they expect growth in this segment going forward.
All right, thanks a lot for that, Surbhi. Well, Prakash, everything is good at a price. Has that price come either for Ipca or for Crompton? The street is disappointed. Second day running, we're seeing selling on both those two stocks. But after this recent correction, are you interested or you do?
So let me take the question Crompton, Nigel, because Ipca and Unichem vested interest. On Crompton, it's very simple. They're trying to justify to create this overlap and issues related to accountability and responsibility, and what they're trying to do is required, which means the market's not going to kind of like all that it hears. Actually, blockbuster products, very promising in the future, haven't done well. So they need to, especially the fan segment, which was one of the main. So all of that will need to kind of get rationalized. So I think it will probably give you that price level.
Sorry, I cut you off earlier because of Maruti, but just want to get back on the Gujarat story. So these stocks, the GNFCs and GSPLs, and there's so many other acronyms out there for buybacks.
GSFC, Surbhi. And that happens to hold a piece in all of these companies that we spoke about, whether it's GNFC itself, Gujarat Alkali. So, GSFC has this holding company structure and its own ground on social media now. So for a company which has 40% of cash of its market cap, all the holding companies at about 4,000 crores, you're getting the core business for free. And that's exactly from the time we started and make. And as I was saying, this is only going to make these companies be much more promising in terms of at least to minority shareholders as well. So you'll probably see GSFC getting re-rated in my view, which is zone, whereas the 180 to 185 levels that it touched sometime last year, look very that's going to happen very soon.
GSFC is getting re-rated, as you say, Prakash, right now in front of our eyes, 20% today. The problem is the re-rating and de-rating all happen so quickly nowadays, right? 2-3 days, 50%, 2-3 days, 40% lower. I mean, it's just too very hard to get around the pace of the movement. Too fast. Prakash, thank you very much. Good speaking with you. Appreciate you joining in with all of that perspective. So that's Prakash's view. Well, 30 points higher on the market, 17,797 is where we find ourselves at. So there is a bit of a push higher, which is crept in the last 10 minutes or so. Look at RVNL. I mean, the volumes are out of the park. I mean, I think RVNL, 3 days now, it's been running up. But today itself, it started 9% higher, sold off 13% from the high, then was up 5-6%, and now it's basically up just 2%. So lots of back and forth here, but the volumes are humongous, truly. They started with very large volumes right at the word go, and they're not letting it's not letting off. 36 crore shares, by the way, on RVNL in terms of volumes, as you can see on your screen. Rupen Rajguru is with us, Head of Equity Investment and Strategy at Julius Baer. He's joining us right now to take some questions. Rupen, good to have you with us here. Thank you very much. Let's just start with some manufacturing, CAPEX. One of the big things, and very visibly what is happening is the rollout of these Vande Bharat trains, and the government is very focused that they want to do more of this, right? So 200 trains odd have been kind of put out as a block to be bid out. 120 went, then another 80 went. RVNL, of course, is one of the companies which is the beneficiary of the second lot. Have you done any work in this space? Looked at, where stocks are after the run-up, etc. RVNL used to be 40 rupees 2 years ago. It's done very well since then. Or others in the space, the rail infrastructure space.
Hi, afternoon, Prashant. If you see a clear trend which is there for last 2 years is the focus of the government on CAPEX side. So the two segments in which we are very clearly seeing the focus, one is the railways and second is the defense. And it all boils down to the bigger theme which government wants to focus, which is the import substitution theme, wherein they want to get the indigenous companies up the curve and get them on the manufacturing space. So all in all, I would say in particularly what we are clearly seeing a momentum because the order build-up specifically on the railway side is pretty strong. So all these stocks typically, I think as you rightly said some time back, that they do nothing for a long period of time and then they double, triple in matter of months. Because I think one of the main reason for that is the order book, right? And we are seeing that with the companies related to railways or with defense, wherein now there is a clear sign of strong order book. Earlier, the issue was on the payment cycles, but considering the overall balance sheet of the government, and then what we hear is the payment cycle is also pretty good, and hence there is no working capital issue, which some of these companies usually face when they have a long or a big order book. So net, I think it's just culmination of fact. I think right now market is looking into the order book and giving it the valuation, and I think the key for next 1 year, 2 year would be how they execute.
Rupen, I remember from our last conversation where you indicated that healthcare is a space that you've started looking at because valuations are turning attractive. In that particularly, have you gone ahead and bought any stocks in the last, say, fortnight or last 1 month in the healthcare space? And thoughts on IPCA? Is that a stock that you looked at in the process? And what did you make of that Unichem deal?
Hi, afternoon, Rima. So, there is a saying which is like, things are usually never as good or as bad as it appears at a particular point of time. So healthcare as a whole, as a sector, in fact, beginning of the year, when I spoke with your channel, I think it was one of our contrarian bet because the entire the profit pool of the healthcare sector, is at its multi-year low. So from that perspective, and the stocks have done nothing, and the overall valuation of the healthcare index was lower than Nifty. So all put together, we clearly felt that there is a scope of at least some bit of mean reversion happening there. What we are seeing right now is the primary fear which people have in their mind is the how things are panning up in the US generic side. At least temporary, what we are seeing, there is some, US is facing some kind of shortages in some of those generic medicines, and hence the pricing pressure has eased off, which has helped. Some of the large companies focusing on the US generic side has seen a decent uptick in last few months. Having said that, I will refrain to comment on a particular stock because of compliance reasons. But usually, as I said, the market reaction is always at times is just very, very fast and furious. But give it some time for market to digest, and I think your market will find its own course. But as I said, usually the first reaction is very, very steep, and that's what probably in the stock which you mentioned we are seeing. It might not be as bad as what it appears.
All right. Hi, Rupen. Good afternoon. Rupen, there's a split verdict out there with regard to tech. What's your view? Large cap IT needs to be bought into for a longer time?
Hi, afternoon, Nigel. So in fact, what I said earlier, and if I were to put IT into perspective, 16 or odd months back, nothing could go wrong with IT, right? And I think the biggest issue in the December 2021 quarter, I think now probably everybody has forgotten, was the attrition rate and the higher salaries. The kind of salaries had gone up the roof. Right now, in globally as well as in India, now we are at least seeing layoffs and other things. What happened in IT is probably the valuations went much ahead, because the overall growth of IT pre-COVID was close to 7 to 9%. Because of COVID, probably it went to almost 13% to 18% to mid-cap ITs was 20-25%. But now some of those have come kind of mean reverted, and while that one large IT company, when they revised their guidance, we saw a sharp reaction. But now what has happened is that in IT in particular, what we have to look at from a 1 to 2 year perspective, these companies' valuations are now, say, sub 20 on a FY25 basis. It might be, say, closer to 17, 18 times. And please be mindful of the fact that, while all of us are just now discussing how the Gujarat government's PSU policies have led to re-rating, all these IT companies have a payout policy. Typically, it's around 80 odd %. So if you are at, say, 20 PE or 18 PE, and if you're paying out 80%, either your dividend yield would be more than 4%, and if you are doing buybacks, your ROEs will go up, which should command a higher PE. So net, whatever way I slice and dice, probably on valuations, these companies look much attractive now. And probably now, a lot of the companies have become extra conservative in their guidance. So that 4 to 7% guidance, probably I would say there's a high probability that they might beat the guidance, because they now want to be extra cautious because they missed the guidance. So from net, I gave a long answer, but I would say from a 1 to 2 year perspective, IT, a large cap IT in particular, definitely makes a case to be added in the portfolio.
Okay, so you are the contrarian who would look at perhaps buying some of these dips. Rupen, quick last point before we let you go today. Give us a view on consumer, because we've just started hearing from companies, and in the first glances, the demand is still strong. Whether you look at Nestle's volumes or how Tata Consumer did yesterday, even Maruti for that matter, I mean, they are citing strong demand. That's why they're going ahead with a pretty big capex. So your thoughts, whether you would look to add consumer stocks to the portfolio? If so, what part of it? Discretionary, non-discretionary, autos, FMCG, you can cut it up in different ways.
Sure. Hi, Surbi, and you are absolutely right. Consumer is a very, very vast sector. Just to add to what you said, apart from like yesterday, Pepsi globally declared their numbers, and the indication was the India business growth was in high teens. So that also the food segment within the consumer. So some of the names that you mentioned, which has focus on the food, is probably pretty strong. So staples as a sector, has usually been, and we also for a long period of time have been underweight on that sector. But now we have to see the situation. In the current context, if the global uncertainty were to go up, and while the global stock markets have been quite buoyant, but if actually there is, as they say, hard landing, and if we see the US market correcting by 5-7%, so in that scenario, probably staples would be a safer haven here for a couple of reasons. One, the numbers are not as bad. In fact, the volume growth is good, and I think for a lot of the other companies also, the margin should also start improving because the input costs have eased. Secondly, also these stocks have seen a decent time correction. So in that context, their valuation, which was very high, is still high, but not as high as what it was some time back. So in the current uncertainty scenario, probably should be, to answer your question, for next quarter or two, staples would be good space to hide in the current scenario.
Right. All right, Rupen, thanks so much for stopping by and giving us your view on a whole host of those sectors. Look forward to having a chat with you rather soon. By the way, when we were having the chat with Rupen, the markets have gone ahead and hit a half century. The buy on dips is working. The Nifty Bank, that's moved to the high point of the day. And we mentioned this earlier today as well. Yesterday, there was expiry that played out. That's why the financial index, that's why the Nifty Bank ended at the low point of the day. Today, it's unwinding all of that. So it's reversing what it saw yesterday. You have ICICI Bank, Infosys, and HUL, just highlighting these three because they're the heavier weights. They have moved to the high point of the day. Nifty up 50 points or thereabouts. But time to shift focus to our special segment, D-Street Chatter. Nimesh is with us. Nimesh, what are you picking up? I mean, still in that band, but now we are closer to the higher end of the band. What are you picking up?
Nigel, as you rightly pointed out, we are at the upper end of this band, but the action has picked up. It's an actionable day, so to speak. The volumes are on the higher side. There is a lot of participation from the larger institutions as well. The flows are both ways, but still, it's biased towards positive, and that bias is largely on the financial name. So that's the overall feedback as far as flows are concerned. But I guess today the big sector or the big talking point is the Gujarat-based companies. Huge re-rating event, so to speak, and all the stocks are largely at upper circuits. And I believe there is buying as well. There is genuine buying from large institutions who are looking to play the dividend yield in many of these PSU stocks. And hence, you're going to see large volumes in many of these Gujarat-based stocks in today's set. So that's the overall feedback. I guess, from a near-term point of view, we've been talking about it, that earnings are going to dominate the trend. And that's been the part for the last many days, and that's going to be the course for the next few days as well. So again, back to the higher end of the technical range, but from a today's action point of view, a lot of volumes, and backed by some big buying as well, and that financial buying continues. As you started off by saying, it's an actionable day, right? There's plenty of action that we're seeing, many stocks flying around. Yeah. For individual stocks, what are you picking up? So in terms of individual names, the first stock on my list is Shriram Finance. In a good market, that stock is under pressure today, down 3%. I guess one of the key reasons is there is a strong buzz of a large block deal coming in Shriram Finance very soon. And could be the seller could be potential, the private equity investor. So that's something to track as far as Shriram Finance is concerned. The second stock is AU Small Finance Bank. Strong numbers, but I guess the guidance was slightly weak, and there is strong selling flows as well at a leading FID. So the delivery volumes are going to be quite high in AU Finance in today's trade. The third stock is Dishman Carbogen. This is an interesting stock. Quietly, this stock is up 15% this month. This year, Y2D, the stock is up 60% and has been back on the investor radar. And I believe one of the leading HNI investor is an active buyer, and hence this stock is in a big move in recent times. And the last stock is Tata Steel. Again, this stock has been consolidating in a very narrow range for the last many days now. For the second day running, there is a feedback of large sell flows. Having said that, still the stock is not falling too much. So it looks like the large selling pressure is getting absorbed to some extent, but there is selling pressure for sure in Tata Steel in today's trade. Okay, all right. Thanks a lot for that. Nimesh, well, time to slip into a short break. You come back, final 15 minutes of trade. We'll discuss a few more stocks with you. Stay with us.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो एसआईपी है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही एसआईपी है, तो जिंदगी के लिए एसआईपी क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. Mutual Fund निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे Z। चलो देश का रूप निखारें, पर्यावरण को हम ही संवारें, प्रदूषण से बचाने को अपनाएंगे।
Register with Ministry of MSME's SET certification scheme today and help India become a global manufacturing.
Nitesh, thank you very much for that. Now let's turn our attention to a new segment on the show, Earnings Corner. In this segment, we tell you what are the key earnings to track for the rest of this week. To name a few, for today, Bajaj Finance, Voltas are the big numbers to track. ACC, HUL, Axis Bank, Tech Mahindra will be reporting numbers tomorrow. On the 28th of April, that is Friday, a few companies will be reporting numbers and we'll be tracking Ultratech Cement, L&T Finance and M&M Finance. And finally, on Saturday, a host of banking numbers will be reporting their quarterly earnings, Kotak Mahindra Bank being the big one to track.
All right, from today's list of earnings, let's kick it off with Voltas, which will report earnings later today. Surabhi is here with a quick preview. Surabhi.
Thanks so much for that. So Voltas reports its earnings today, and our poll suggests that we will see a revenue growth on a year-on-year basis. But due to unseasonal rains and high competitive pressure, the volumes in the room AC segment are expected to be impacted. So we'll be watching out for volume growth numbers. We'll also be watching out for any commentary from the management on their pricing strategy, whether they had to give additional discounts to gain the volume growth number or not. We'll also be watching out for their market share number. Now, their market share has been gradually declining in the last year. Last March, it was around 23.4%, and as of December, it has come down to 22.5%. So the market share number stands important. Their revenue and margin growth in their EMPS segment, which is electromechanical projects segment, will remain important. So order inflow and cash flow, cash flow collections are some key metrics to watch out for in this segment. And lastly, any announcement on additional manufacturing capacity or further plans to backward integrate their existing plant are also some things that will be some things to keep in mind.
Indeed, Surabhi. Thanks so much for joining in. Results, market share, commentary, very, very important. Now, for tomorrow's list of earnings, Abhishek is here to tell us the key expectations from Axis Bank. Abhishek?
Well, there could be a lot of one-offs this time around, given the fact that there is Citi's acquisition, which will go through the numbers as well. So they will report numbers along with Citi's retail business of India. So key things to watch is that the NI growth on a YY basis is pegged at around 35% as per our poll, which is one of the best in last 8 years. Net interest margin, however, is expected to decline. As per Phillip Capital estimate, it's estimated to decline by 10 basis points. Phillip Capital estimates growth along the loan growth along with Citi book to be about 15.3% YOY and about 7% sequentially. So total watch list is around 7,100 crore. How that moves will be seen closely. Asset quality is expected to improve. Phillip Capital estimates gross NPA to be at 2.2% when compared to 2.38% in the previous quarter. They also expect the slippages of formation of bad loans to be at 4,000 crore versus 3,807 crore in the previous quarter. So provisions for Citi acquisition will go through. So about 11,600 crore of provisions is what they need to do. Management commentary with respect to outlook on growth and credit costs will be seen closely, and any fund raising approval that they take from board will be watched closely. Our poll suggests NI growth of more than 35% YOY and about 4% sequentially, and we are working with a net loss of more than 5,700 crores versus a profit of 4,118 crore in the same quarter last year. Back to you.
Okay, got that, Abhishek. Thanks very much. Axis Bank, I think ICICI has set the bar really high. So there's very little scope for disappointing the street now when it comes to large private banks. Well, from the consumer space, we will watch out for HUL, the big titan. Mangalam, what are the expectations?
Well, 5 key things to watch from HUL. We start from the top line first. 13.5% growth in the company's revenue is what we're expecting. And this time around, the volume growth will be around 5 to 6%. The rest, of course, would be price-led growth. At the same time, last quarter, the company reported 1% volume growth. So that's one. Secondly, we'll be watching out for the EBITDA. That grows at around 12.5%, which implies that the margins would stay steady at 24% versus 24.1%. And this despite the third thing that we have to watch out for, which is gross margins. 150 to 180 basis points improvement out there because the raw material inflation situation has gotten better for them. We've seen some softening. So the first thing, revenue. Second thing, you watch your EBITDA margins. The third thing you watch out for are the gross margins itself. The company would take some gross margins and reinvest in ad spends to spur demand. The fourth thing that you watch is the net profit growth of 11%. We're working with a number just shy of that 2,600 crores mark on HUL's bottom line. But the fifth and the most important thing is the management commentary. Now, the numbers that the company will report will tell you about the quarter that went by, but the management commentary on demand, El Nino conditions, and especially rural demand is something that will tell you about the quarters to come ahead, and that will be extremely crucial.
All right, Mangalam, thanks very much for that. Mayuresh Joshi is now joining us, Head of Research at William O'Neill. Mayuresh, last few minutes of trade. The entire Gujarat publicized a re-rating that we are seeing, very strong 10 to 20% gains. Prakash Diwan was with us earlier. He said, well, GSFC is a name he would back even without this news flow. Have you given this a look? Are we going to see a sustained re-rating in any of these names?
Afternoon, Prashant. Seems to be the case because I think the kind of capital allocation policies that have got adopted, that clearly implies better return to shareholders, both from an EPS and an ROE perspective. Having said that, I think looking at the permutation combination, both in terms of the available cash on books, the net worth criteria, the dividend yield payouts, and the buyback elements involved, I would tend to agree. I think GSFC and to a certain extent GMDC probably seem to be ideal candidates. Where I think the fundamentals are also probably shifting for the better. Take in case GMDC, Prashant, the expectation in terms of not just the lignite production, the rare earth minerals, if they're able to successfully evacuate and probably process the same in the next few quarters and years, that can be a huge revenue potential for the company itself. And potential cash flows can improve quite significantly over the next few years. So I think with improving cash flows, obviously I think the dividend yield payouts and the earnings will also imply an increased growth. For GSFC, obviously I think the expectations in terms of not just the core elements on its balance sheet itself, but the product mix itself should be useful as well. So yeah, I think to a certain extent, these two stocks and momentum can very well continue.
Okay, the momentum on GNFC and GSFC can continue. Do stay on. Need to slip into a very short break. We'll come back with market closing.
अभी तक मटेरियल आए नहीं? पैसे नहीं है। अच्छा।
यूप्रो कैपिटल का ग्रो-एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
We are all different, but our soul is the same. We go wherever life takes us. And we do it in our own way. Because it's our differences that make us who we are.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
an investor education initiative by HDFC Mutual Fund. Mutual Fund निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Just 40 points away from the highs that we made previous Monday, which was the 17th. That was 17,863, and we leave off at about 17,820. This is, kind of similar to the price action we've seen over the last couple of days. Second half, all of the action picks up, the market comes alive, and gains are there on the table. Although, unlike yesterday, the gains held and the market did not give it back in the last 10 minutes or so of trade. Bank Nifty will come up on your screen as well, 0.5%, 0.4%. So again, banks also pretty much the index ending almost at the high point of the day. And I think you got the market breadth, which looked good, 1,270 stocks higher and about 970 stocks, which was lower. That was waxing and waning all day through. It almost became 1:1 at one point of the day, and then put some distance between advances and declines towards the end. Lots of names in the broader market, because that is really where bulk of the action was. Starting, of course, with all of those names, starting with the word Gujarat, which did very, very well. Rima.
Well, let me just run through some of the frontliners, and then we'll get to the Gujarat-based companies. Power Grid was your top Nifty gainer, 2.5% up move. FMCG names led by Tata Consumer, Nestle, HUL as well saw buying in the last 10 minutes. All these stocks ending strong. L&T up nearly 1.5%. IndusInd Bank sees buying. In the IT pack, HCL Tech, TCS close up quite smartly. On the losing side, commodity names. So Hindalco was the top index loser with a cut of 1.5%. JSW Steel down. Bajaj Auto hit a fresh 52-week high yesterday. So despite decent numbers, a resilient performance, the stock came in for some profit booking. Bajaj Finserv subdued in trade, and Reliance Industries was the drag in trade.
And how can you forget IPCA? Again, 5.5% down today after a huge drubbing yesterday. The disappointment in their acquisition continues. In terms of other reactions on the way down, Poonawalla FinCorp stands out. Numbers look quite okay, actually. Margins higher, assets sort of growing very well. But even then, stocks ending down 2.5%. Some of the railway stocks decided to take off a little bit of steam, but very little, might I add. So Titagarh Wagons, IRFC, these stocks are down between 2 to 3%, nothing more than that. But again, a day that really belonged to the gainers. You've got Lemon Tree Hotels, for instance, a delivery, a lot of these stocks on the upside. And of course, then the whole Gujarat rally. So as we are winding up, let's sort of get some of those rates on the screen. Final tally for a GSFC 20%, GMDC 20%, Gujarat Alkali 16%, GNFC 11%, GSPL running out of breath here. But that was really the day belonging to the Gujarat PSUs because of the change in policy. By the way, the Bank Nifty is actually ending on a very strong wicket, about 0.5% gain on the Bank Nifty, looking better than the Nifty, but even the Nifty inching its way towards the previous high of 17,863.
Well, there goes, the bell has gone and the Nifty has ended at levels of 17,818. We didn't quite get to the April series high levels of 17,863, but at least today we managed to conquer 17,800. Another day where the markets nudged higher. It's a wrap and closing bell. Thank you very much for watching.